Good afternoon. I'm Brett Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. Welcome to today's Smart Investing Daily Briefing. Well, we're still talking about Brexit. We talked about a lot on Friday. Had a big decline in the markets then. Today, same situation. So we thought there's more we can kind of share with you to help you understand what is going on with Brexit to make you a smarter investor. Well, some important numbers on Brexit. Well, Scotland, kind of amazing, 62 to 38% said, no, we don't want to leave the EU. What's even more amazing, back in 2014, they voted to stay with Great Britain. So they kind of probably regret that now, but if they had the revote, it might change a little bit to where they would say, no, we're going to stay. Which brings to the point of the UK referendum they have with over 3 million people signing, saying we want to redo this again because it was not fair, it wasn't right. Unfortunately, a lot of people, younger people, who needs to vote? And they should have voted, and they did not.
Yeah, exactly. And kind of one thing we've been talking about is this is going to take time for the Brexit to actually occur. Article 50, which actually enacts the formal process for them leaving the EU, has yet to be signed, and the Prime Minister has actually come out and said that's the next Prime Minister's job.
Yeah.
So
very more time.
Yeah, exactly. So I mean, it's not a thing that people are going to rush into. So, and we've been saying that's why it's a short-term correction, I think, in the stock market. Long-term, everything will be okay. And we have seen a lot of global losses in the global markets and stuff. Before today, it was $2.1 trillion, and the total global market is $42 trillion. So that's a pretty substantial loss there.
And also, too, this is larger than the actual loss we had back in 2008 when the banks got declined about doing the bailout and so forth. That's about a $2 trillion loss. So this is much higher than that because, again, this is, and it's kind of amazing. This reminds a lot of Greece because Greece was a terrible thing, but did not affect us here in the United States. So look at your companies you have here in the United States. We talk about builders are doing fine, but yet they're down. It's crazy.
Yeah, it is crazy. And we've seen a substantial decline in a lot of companies, which means an increase in dividend yields for those companies. And actually over 60% of companies now have a higher dividend yield than the 10-year treasury. You can see that's what we're talking about here. And the 10-year treasury is now about 1.46% to 1.5%, somewhere in there. And again, those S&P 500 companies, over 60% of them have a higher dividend yield. I know where I'm going to invest, not the 10-year treasury.
Not the 10-year treasury, no. Because the other thing, too, dividend yields increase because companies do better 10 years from now. They're paying much higher than that yield. So let's talk about a company here for you because everybody's worried about, like, oh, what's going on? Better buy gold. So we have a gold company, Newmont Mining. We see back in 2012, way high, almost over $60 a share. Currently around $37 a share, a high 38, the low 15, 39. Let's take a peek at some numbers, see if it's worth buying now or not. We do see their sales looking pretty good, up 3.9%, but earnings fell 84.5%. Don't like seeing that. They do have a decent balance sheet with a current ratio of 3.2 and debt to equity 50. I like the balance sheet. Looks pretty good.
That balance sheet looks good, but looking forward to get our target sell price. As you can see, December 2017 estimated earnings per share $1.56. Gives a target sell price $25.74. So below that current price. I did want to point out here there are 13 analysts that are estimating this December 2017 estimated earnings number, and kind of took a look at the high and the low. As you can see, the high estimate $2.15 and that low estimate 94 cents. Reason I want to look at this, even the high estimate at $2.15, I would not be buying the company.
No, it doesn't. I'm kind of surprised on that, unfortunately, but that's kind of what happened. So maybe you're not concerned what you should be doing with your money. This whole thing has you kind of stuck on your tracks. Like, I don't know what to do, don't know where to turn to, and so forth. And you're not happy with the returns, not happy with the current advisor, not knowing what to do either in here with this whole situation. Maybe that means it's time for you to give us a call here at Wilsey Asset Management. We've been managing money successfully for over 30 years now.
Now, our phone number here is 858-546-4306, or you can contact us at our website. Also, if you've missed any Smart Investing Daily Briefings, be sure to go there. That's smartinvesting2000.com.